You could say that. Anyway, what's up, guys?
Like my shirt?
Yeah, I do.
I'm getting heavy into the sacred geometry.
I met a guy with a dope tattoo
Of that.
Wow, that's aggressive.
A guy who came to our happy hour, actually.
Wow, Fibonacci tattoo. That's aggressive.
Yeah.
If I were to ever get a tattoo, I don't have any. I'm clean.
Big one right here. It was pretty cool.
Pretty funny, actually.
Oh, we're on air?
Yeah.
Are we on?
Yeah.
You know, I'm starting to get afraid that I'm going to become one of these old angry guys. You know, like think about this. Like I'm 2 decades into this plus, right? Like I'm pushing 25 years soon. I'm turning 44 next in a couple months, right? So when I see things and I'm like, oh, that's stupid, that's never gonna work. I wonder, I'm like, am I becoming an angry old guy? Or like, is that actually stupid? You know?
I don't think you are. I don't think so. I think you have your own little style and pizzazz about you. Maybe slightly jaded. I don't think you're a cranky old guy yet. You got time.
Yet. So you're saying that that's a real possibility.
I think, a lot of us head down that road in this business.
I know. I don't want that to you because I see, like, dude, like you got the CEO of Kalshi out there talking about how it's $100 billion market cap and it's, what's another 10x from here to $1 trillion. That's not true. It's like if you add up all the market cap of the entire prediction markets, it's still a penny stock, right? It's nowhere near $1 billion, yet alone $100 billion. Like, I think they're confusing volume and market cap, and nobody's calling them out on it.
Well, there's also private valuations, JC. It's a different.
That has nothing to do with the market itself. We're talking about real liquidity here.
Talking about the total market, I think.
He's talking about total market cap, $100 billion right now. That's bullshit. It's like 300 million.
You're talking about the total market of these betting odds markets.
Yeah, they're using volume, be like total volume this year, and calculating that and trying to tell people that that's market cap when it's the furthest thing from it.
I've never dabbled, so I don't know anything about it. I hear stories, and these markets sound way too thin. That's why
they're super thin. They're thick. We can participate in them as individual investors. I like the data that we get from it because it's the truth. But let's not pretend that these are real markets. Like you got the CEO of Kalshi out there saying how it's going to be bigger than the stock market and how it's going to be at $1 trillion because what's a 10x from 100 billion when it's only a penny stock, 300 million, maybe. I wonder, am I just an angry old guy or are these guys actually completely full of shit?
The poly market guy was on 60 Minutes, I think.
I was just watching an interview with Molly. What was her name? Molly O'Shea. She's good. I like her, and she keeps it real. So that was, they're just making things up.
I don't know who that is.
She's like one, fintech, crypto, startup-y, Silicon Valley. She does like podcasts and stuff.
I keep hearing from people that they're just having great experiences on Robinhood. One of our friends was telling me yesterday that he's getting better fills with Robinhood options than some other brokers.
Wow, that's really interesting. I would have expected the opposite.
Yeah, I was like, bullshit. He's like, I swear. I'm like, I don't know. I got to get in there and check it out.
You should play around with it. I'm definitely not going to do that. I own like a couple $1,000s worth of Dogecoin in there.
I don't even have an account.
My Robinhood portfolio.
I would have to open a new account. I don't even. Yeah,
I use it because I like the overnight futures, just in case I want to take a look at what a stock's doing overnight. That's the only reason I use it, and it's great. Especially like on Sunday nights, I want to see which stocks are moving. It's usually like triple levered ETFs, but like I try to go to the stocks themselves.
You're talking about a thin markets, JC?
Yeah, who's doing that stuff?
Who's trading triple levered ETFs in the middle of the night?
We're criticizing thin markets over here. What are we talking about?
Yeah, but those thin markets and the prediction markets are good information. They told us it was going to be a landslide victory by Donald Trump, and everybody was like, oh, but the polls and Kamala or whatever. And then what's his face? Wallace.
Okay, so you do I'm so confused.
No, I like the data. I've always liked the data. I was rooting for them. Remember? Like I was the most bullish guy. But let's not pretend that this is $100 billion market. Okay. It's like a tiny, tiny, tiny little fraction of that. So I don't know why they're making things up. So that's why I wonder if I'm just an angry old guy or if these guys are actually completely full of shit. And I'm thinking it's the latter because I did the math.
I don't think that this trend is going away anytime soon. I think it's here to stay. I think it'll only
100%.
get bigger.
Agreed.
But for now, it's wildly insignificant and not a market that I feel like participating in at all quite yet.
And it's not going to be bigger than the stock market.
No.
Yeah. So that's what they're saying.
I know. Oh well.
Oh,
hey,
can we go?
I just to the chat real quick. I know there's other TC2000 users out there. Is anybody having trouble with the software? I don't know if it's a me problem or if it's like a software issue, but I'm crawling over here and I can't live without it. I'm losing my mind. This is day 2, barely being able to use TC2000. I got to figure this out. So
all right. Well, while we're on the topic, has anyone tried Fidelity Trader Plus yet? And if you have,
I have not.
Michael Saylor just moved $1 billion of Bitcoin to his Fidelity account. Swear to God.
Really?
Yep. Michael Saylor using Fidelity Plus.
That's great. It's really good.
The more you know. All right, what's up, everybody? This is us. That's you.
Hello.
That's them. We got a morning show. Sean will join us. Kenny will join us. What's going on, guys? Besides poly markets and betting markets and thin overnight markets, we got a lot of earnings to discuss. I want to talk about Snowflake and Salesforce and dollar, both dollar stores, I suppose. And maybe a Kroger, sneak that in there if we can. We got a lot going on this morning. Silver.
I want to give a shout out. Can I give a shout out?
Sure.
I want to give a shout out to somebody by the name of user-ER7FB8IH4I.
I see it.
For the high beta, low volatility ratio, getting back to new highs. Great call out right there. Somebody's paying attention. The username might not be that creative or very creative, and I'm just not smart enough to know what all those letters mean. But nevertheless, excellent point in high beta, back to new highs. Can I tell you why I think that's so important? Because the second largest component of high beta represents what sector? Steve Strazza, Spencer Israel.
Second largest sector in high beta?
Yep.
I don't know.
Come on.
Tech?
Tech's the largest, bro.
Communications? Discretionary?
Discretionary.
Yeah.
And
well, that makes sense. Discretionary's been on a heater the last couple of weeks, so that makes sense.
I'm saying you laughed at me when I told you that transports were making moves. Here they are. They're going to make a new 52-week high today. They laughed at me. You too, Spencer. I'm looking at you, Spencer. Laughed at me. Yeah, that's right. Check the tape. You laughed at me. They're laughing at me about the discretionary. The consumer's dead.
No one's laughing at you. Everyone sees it.
Nobody's laughing at me. Nobody's laughing at me. But they did laugh at me about the transports, and they did laugh at me about healthcare 3 months earlier. Right now, nobody's laughing at me about discretionary.
No.
Yeah. Well, Jeff nice call out. I beta low volatility. Not all-time highs just yet, but I mean it's right there, dude.
Really nice candle from Tesla yesterday.
Woo!
At a big level. So
I have a Tesla chart. I have a discretionary chart. Can we do a little state of the markets and get after it?
Classic non-top, really.
In
textbook.
what?
Textbook non-top.
In what?
Tesla.
No, it just looks like a base. I don't think it was never not a top.
Oh yeah. Check the internet.
Oh, okay.
Everybody saw it. Yeah.
Oh, good glory. All right, Spencer.
Classic non-top.
All right, let's see what's going on, ladies and gentlemen. I don't know if you heard, but yesterday, the equally weighted Dow Jones Industrial Average closed at the highest level in American history, going back all the way to before World War I.
I definitely did not hear that.
New all-time highs for the Dow. So the Dow Jones Industrial Average today, Spencer Israel, are up 0.0%. Completely flat on the day, just under 48,000. We got S&P 500 futures also 0.06885 flat on the day. NASDAQ 100 also 0.0, Mr. Blutarski, 25,640, completely flat on the day. 30-year bond futures down 0.5% at 116 and change. Crude oil up, trying to hit that 60 level, up 0.75% today. Copper still at 534, down almost a full percent on the day. But man, that copper's made some move. Gold down 0.25%, 42.20. Silver down 1.5%, just under 58. With the VIX flat at 16. 16 divided by 16 is 1, meaning the S&P 500 is pricing in roughly a 1% move per day, including today. So in funny money land, we got Bitcoin 92,760, down 0.75% today. You got Ethereum 3176, down 0.5%. You got the old Solana acting well, 42.5, down 1.5%, and that brings the total crypto market cap. Mr. Spencer Israel 3.12 trillion, down 1.2 trillion from the highs just a couple of months back. How do you feel about this morning's futures?
I don't know if I feel anything about this.
Was it as good for you as it was for me?
I don't know. It seems pretty muted.
Yeah.
Right.
All right. Can we talk about the consumer? You know, we've been talking to one Jeff Mackey a lot lately.
He's been having like the time of the month of his life. I think maybe not his life.
It's like a Super Bowl. It's like a Super Bowl. You know, I mean, you're just getting so much data on the consumer. Walmart's telling everybody how great everything is. You know, and if Mackey says that that's the case, then I believe him. You know, and certainly you're seeing it elsewhere. So I'm a fan of the consumer here. Can we throw up great call out this morning in the chat on the high beta, low volatility ratio, because the high beta, throw up slide 2, high beta, you're getting a lot of technology and you're getting consumer discretionary, right, in that mix. And so I see consumer discretionary pushing up against new highs, right? So how does this make you feel, Spencer Israel, as a consumer, as a man of the people?
I'm a little bit more focused on what they call like the K-shaped economy. You know, there's dispersion. There's good and there's bad, right? And
isn't that always the case in consumer?
Yeah, but it definitely feels like it's spreading into
so Walmart making new all-time highs. How do you feel about that? Is that because it's only rich people?
No. I mean, Walmart is just crushing it.
Is Walmart just crawling with rich people?
I don't know, all right.
Rich people with mullets. And
you bring up a good point.
Up a good
point because like then you look at like the dollar stores as well. And
how many billionaires have a mullet?
What? I don't know. You bring up a good point. In that, you know, Walmart's doing well, the dollar stores are doing well, right? I mean, you wouldn't assume that.
Dude, my wife's at the dollar store once a week. My kids love the dollar store.
I don't know. So the answer to your original question was, how do I feel about the consumer? And it's hard. Look, the default positioning is always Americans buy stuff. That's what we do. So,
but look at what discretionary's been.
This is what's important, though. I think this is the point Spencer wanted to make. You can't buy this whole space. If you look at any discretionary index or even the retail indexes, RTH, XRT, they're at or coming off of their lowest levels of the year relative to the broader market. It's not a good space in terms of broad leadership. However, beneath the surface, you do get some really big winners in these different retail consumer oriented groups. So I think you have to be selective and go find them.
Do you know that Tesla is almost bigger than Amazon in weighting in the consumer discretionary sector?
That's silly.
Did you know that? So why don't we take a look at the components? Because at the end of the day, it's a market of stocks. It's not just a stock market. Right, Strazza?
Yeah, man.
Who taught me that? I didn't make that up. I'm not clever enough to have come up with that one.
No way.
It's a market of stocks. Who taught me that?
Really?
That's an old one.
You're the only person I've ever heard say that. So I
definitely didn't make that one up.
No.
It's
a pretty popular one.
No, that's a good one, but it wasn't me. Who said it? You think it was Hurley? No.
People have been saying this for 100 years.
Yeah, I don't think so. I think it's more recent than that. So this is the second largest component in the consumer discretionary sector. Amazon is 21.2. Tesla is 20.6. Fun fact.
Looking good. Looking good for the Tesla.
Look, so 3,000%. From 80 billion to 1.3 trillion, more shareholder value increased faster than any CEO in world history. Never happened.
Eh.
All right.
What is that face?
I got stopped out of this, whatever it was, a couple weeks ago. I might have to take another nibble.
Ooh, a
How
little
could you
shake
get
and bake
stopped out of
Spencer's
this?
account. Little shake and bake.
You got shook out on the top? You were one of those people who were calling it a top then. If you got stopped out.
I'm not calling anything.
Well, you must have thought it was a top. Why else would you stop yourself out?
Oh, that's just a stupid stop loss area.
You probably drew a little line right here at those pivot lows where that gap up is. It's called
things look precarious a couple weeks ago.
Yeah,
okay.
Yeah.
Give me a break.
Sometimes they're tops, sometimes they're non-tops.
Give me a break.
Sometimes they're just, well, it's okay.
All right, let's take a look at, so this Tesla, huge base, 3,000% on the way up. Well-deserved consolidation after that $1.22 trillion in increase in market capitalization in less than 2 years. Well-deserved multi-year digestion of those gains. Now we can move on and go up another 3,000%, which would make this what, like a $500 trillion company?
Mm-hmm. Sure. To the moon.
That was a joke. That was a joke. Funny, haha. Good one, JC. No?
It's a good chart. Don't
don't
think about the fundamentals. They still don't make sense.
Dude, fundamentals. Could you imagine being one of these people trying to put a valuation on one of these bastards? Come on.
Rotating through the different Mag 7s using just basic valuation metrics has been such a cheat code this cycle. Just going to the cheapest one and betting on catch up, going to the cheapest one, betting on catch up. It keeps working. Tesla hasn't been a part of that.
Throw up the Amazon. Throw up the Amazon. So this is still the biggest. Amazon, 21% of the consumer discretionary sector. Probably should be more. These people are at my house every day.
Yeah.
Right? Like the joke is like sometimes they knock on the door because they don't have anything to deliver and they're like, hey, is everything all right? You guys good? You guys okay? Like a wellness check.
You get to know your
today, Jay. All right.
You get to know your delivery person pretty well.
Dude.
Yeah.
All right,
I got
hold
one.
on, one more, and then one more. Throw up the new slide 6 there. Ready?
Oh my.
Is this a chart crime?
Oh.
Or is it like this?
Well, dude.
I'm flirting with chart crime here, aren't I?
It's okay. I see hope when I look at this.
Am I being overly creative?
I see hope. Yeah.
Considering what you're seeing in consumer discretionary as a sector, considering what you're seeing in Amazon and Tesla,
no.
Are you going to bet that those are going to resolve higher and this one's going to keep crashing down? And this is the third largest component, by the way.
I'll do you one better than that. How about considering what you've seen from housing stocks these last 2 weeks? That to me is why Home Depot's not going to break to new lows here.
Yeah.
Housing's been good.
Yeah.
Yep. What they just say? Mortgage rates fell last month. Is there movement? Is there movement in the market?
Look.
No.
Can I do one discretionary stock? Speaking of Tesla,
give it to me. Poor man's Tesla.
One of the best coils in the market here. I'm more interested in this EV company.
This has been on my watch list for a while, Steve.
Huh? You like it?
It's been on my. I haven't owned it. It's been on my watch list for a while.
The moment is now. I just beefed into some common stock over the past week, and we're long calls too. I think we're pretty close to selling double here.
Spencer, drop the chat the link from the conversation that I had with Mackie the other day. That was freaking awesome. Guys, we talk about more than just the consumer discretionary stocks. We're talking about Walmart, which technically is a consumer staple, making new all-time highs, though. I don't buy that it's a consumer staple. Walmart is the largest grocer. Is that a word? Grocer? Is that what the people who sell groceries? Are they grocers?
Look, I think
Strazza is definitely grosser than Spencer. That's for sure.
We are getting to a point. We are getting to a point where there is a class of businesses that are just that they don't fit neatly into a sector.
Dude, it's a grocery store. You can buy anything. It's not a consumer. It's not a consumer staple. It's a consumer discretionary.
Looks like one.
Walmart is not unique in that they check all the boxes, or they check a bunch of boxes. There's a whole class. I mean, Apple is kind of the same way. Amazon, is it a cloud company? Is it an e-commerce
Everything.
company?
Everything. I'm so tired of this conversation. It's so stupid. The classifications. Nothing fits perfectly in just one sector anymore.
No.
You can make an argument everything's got a little bit of technology in it these days.
I know, but Strazza, my
Apple's a
point
consumer
here.
staples company, as far as I'm concerned.
Hold on.
But whatever.
My point here is that Walmart is making new all-time highs, and we're sitting here talking about consumer discretionary. And if this is consumer discretionary, if Amazon's consumer discretionary, it's further evidence that we should be betting on consumer discretionary stocks. It might not appear in the indexes, but I would argue Walmart breaking out of this how big was this base in Walmart? It just broke out. Like that, to me, you won't show up in the indexes, but it passes the eye test, as you see, as part of consumer discretionary. Call me crazy.
No, you bet on those ones, though. Like, you don't make a broad bet on the group. When there is broad strength in a sector, it will show up at the indexes, and it'll show up in the relative trends. We see it all the time.
But I think Walmart breaking out here could be a further evidence that consumer discretionary stocks are a buy right here, right now. That's all.
Could be a leading indicator.
I'm saying
of improved internals for that group in the future. Yeah,
I think so.
But Walmart specifically has left the station. It's been gone for a while, so you probably want to look elsewhere.
Right? You know,
here I have it handy here.
It's been a hard stock to get into over the years. Walmart.
You've had plenty of time to get into it. I don't want to hear this. Throw up slide 2. I don't want to hear for 1 second. You had plenty of time to get into this name.
It's in a straight line higher.
Dude, this thing peaked in February and has gone sideways for 9 months. And you're telling me that you haven't had time to get in this thing. I don't want to hear that. That's fucking bullshit.
No,
this thing hasn't done anything since February.
No, I'll be more honest. I don't miss it or think about it too much. You know, in a bull market, I'm not going to, I got to get into Walmart. That's not a thought that I'm having. You know, so
nobody's saying that you need
a long-term account to buy and hold forever. But like, I'm not disappointed about missing Walmart in a raging bull market.
It's not about buying it. I mean, I probably own it. I'm actually checking my account right now to see if I have it.
So you have it in a long-term account.
I think I do. I have to double. I got to check. I'm checking right now. As a matter of fact,
we all have it. Everyone has it. It's just a question of you own it directly or not.
My point here is that I think I'm considering it further evidence that here we go. I have 114 shares. Shout out to me.
Booyah.
Nice. I'm up 174%. Hey now, long-term account.
That's what you do. You buy stocks like Walmart and you forget about them.
You literally forget that you own it.
I didn't know whether I owned it or not. I mean, these are long-term accounts, like by definition. So, so shout out to Walmart. My point is, I think that if we're having a conversation about consumer discretionary, to ignore the fact that Walmart is making new all-time highs is silly. That's it. Right? I think we can all agree on that.
I'm a big fan of Walmart Plus.
We use Sam's Club.
Yeah.
We're not Costco family.
I don't know about that though.
Because you know why? Because my mother-in-law lives close to a Sam's and she uses Sam's, and my wife's like, all right, we'll just do the same
proximity thing. Yeah, substitutes.
What does Mackie say, that 90% of Americans live within 10 miles of a Walmart?
Something like that.
They're everywhere.
Dude, the liquor store next to the Sam's Club by me is whoo.
I was a part of the 10% who actually lived about 3 hours from the closest Walmart. So boy, is it nice being back up on the mainland, having these luxuries like Walmart that I could just drive to.
Dude, I have friends that go late night. They get drunk and they go late night to Walmart, like as a couple on Saturday nights.
That's hilarious.
Yeah.
It's really weird.
Yeah.
Really
no,
weird.
I don't think it's weird. I think that's a thing.
Strange.
No, that's a thing. Chat, can you back me up? I know people. I wouldn't call them my best friends, but I know people. That's a thing. You get drunk and you go with your significant other to Walmart on Saturday night. Come on, guys. Give me a...
Kenny, are you doing this? Do you get drunk and then go to Walmart with your family? No.
A little sipping shop.
I don't think hit a couple bong rips and then go into Walmart, see what's going on. That's what they do.
That's what all the cars sitting in the parking lot are doing.
I don't think so.
Oh god. Great place.
All right.
I'm a fan.
Staying in Burlington. All right, I'm bringing Kenny out.
It's been a long time coming. They ain't come from my club, they tugged it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house. Hello, sir.
I'll back your story and I'll raise you. So I've got a Walmart. I got a house down in Little Egg Harbor. It's about 20 minutes away from Atlantic City, and there's a Walmart there. And that Walmart, they camp outside the Walmart. So they're just basically just a tailgate. There's a tree, they had a barbecue going. So I just dying to know, like, what are you guys doing here? And they're like, we're just hanging out. I'm like, just hanging out in the Walmart parking lot? It's like, yeah. You want a beer? I'm like, no, but that's cool. All right. You take care now. It was like a cookout. It was like a tailgate. I was like, what the hell's going on here? Dude, just chilling, just macking out in the Walmart parking lot. So, and speaking of bong rips, yeah, I like when the lights are a little bit lower, so those halogens really get you going a little bit. But the Walmart's the ceilings are too high for me in the Walmart.
You want to hear something funny? I've actually tailgated in the Walmart parking lot quite a bit over the years because they changed the laws, the rules going into, Hard Rock Stadium in Miami. So like you can't like save parking spots for your friends to come in and tailgate next to you. You have to go in together. Right. So there's a Walmart down the road from the stadium. So like we always meet there and then caravan together into the stadium so that we can all park next to each other. Gotcha. So then some people obviously get there earlier than others. So everyone's sitting there drinking, boozing in the parking lot of the Walmart before going to the Canes game. True story.
All right. Yeah.
So it's a thing. It's a thing. Kenny Glick.
Yeah. Tell us about these earnings, man. We got a lot of earnings today.
A lot going on.
I don't even want to start today because yesterday was so awesome. If we could just do yesterday over and over again. I mean, every one of the earnings plays worked out. And the one that was kind of boring later that day was Crowd, CRWD. And, we were waiting for it to go green. And it was just sitting around. And it kind of teased us. And I was like, just wait for it to pull back at least 7 points, do the faux show, bro, and it'll rip into the close. And then that one worked also. So, yeah, I mean, we got a decent list today. Path, Strazza and I know about Path. That was one of the more disappointing stocks last year. But you got 5, you got AI, you got Path. Same kind of thing. Not a lot going on right now in the pre-market. So I'm just going to wait for the open and see what pans out. But, man, yesterday was something. And if you guys listen, for my next promotion, I just want to gather some of my noobs from the chat room. Because when you walk in there, and if this is your first couple of days with us, it's been extraordinary. I mean, these trades are working every time they show up, those faux show bros and the blow-off tops. And I'd like to hear more about how you guys are doing instead of me talking every day. So if you guys are out there and you're enjoying the room, send us an email. I want to do like this kind of call-in show, kind of like a talk show thing going for our next promo. And I just want to interview people that have been coming into the room to see your experiences. So if you're out there and you're willing to get on film or tell us a little bit about what you've been experiencing, let me know.
Kenny Glick, on the NASDAQ Q specifically, are we just kind of like in this doldrum where you're not expecting a bigger move in either direction? We're kind of in this choppy, like as a day trader, right? Are you looking at this kind of like there's not really anything to fade? We're kind of like in this middle ground. Is that how you're thinking about it, or am I wrong there?
Well, right now every dip is a buy. So no matter what the time frame is. So that Thursday event that
until what would have to happen to invalidate that?
We'd have to break prior day lows and multiple time frame VWAP, and we just keep testing it. So the tests get held. And yesterday, I'm not too sure if that was the Microsoft fake news or the jobs report reaction.
I think it was the Microsoft fake news.
Okay, because somebody said that was more about the jobs report. I thought the jobs report, whatever that jobs number came out 8:15.
No, the way the timing of the news was, it was
right.
Fake news.
So that move right there. So while we were in the middle of it, where it ended was the prior day VWAP. So like I keep telling you, the news that comes out seems to be the cover story to the market being completely rigged. So now yesterday's lows are now what we call generational lows. Unless they break down, you got it just like now. Look, the market tried to go down this morning and it's already reversed back up and breaking back out. So if you just trade with the mantra that this market's not going down, especially when you're short, you know you're going to have to cover and go long, which is what the faux show bro is all about. And that's we're sticking right here. You know, I don't know if we're going to have an enormous rally. It doesn't matter to us as far as the day trading is concerned. But man, you cannot, and I don't think, unless you're delusional, you cannot stay short anything. Unless, and again, all that talk about legging into shorts, your legs are broken and you're on the side of the road gasping for air right now. I don't want to hear it. You cannot stay short. And even the pump and dumps are getting hard to short. Did you see what happened to PL?
What do you consider a pump and dump?
Any stock that's over 100%. Usually it's a biotech or a therapeutics or some bullshit short squeeze of a split adjusted name. Take a look at PLRZ. You know, we had some fun with this a couple of days ago, and then it got dumped and you forget about it. And then suddenly they just wake up out of nowhere and they're back in play. So there's just so much going on. You just got to sit back and wait for it.
What does forget about it mean?
Forget about it.
Sometimes it just means, forget about it.
Yeah, forget about it. You know, sometimes you just got to forget about it. But
yeah,
listen, this market just did exactly here. Let me show you. I'm pretty sure it just did what I was just describing. So as we're sitting here, funny because yesterday we were sitting here and the market went the other way, and now we're sitting here and it just reversed back the other direction. Yeah, so basically right here. This is our trade. And if you guys don't know, these zero-date options, do not be afraid of zero-date options.
They're great. I was originally like, man, this is for junkies, but no, zero-date. I mean, honestly, they're just options, the same options that I've always traded, except they expire at the end of the day. So all things remain equal. It's just you adjust for the time frame, but same thing.
And it's fantastic because now you get to trade the Qs, which are definitely going to move in more than dollar increments on most days. So if you're trading at the money options for $1.50, you basically own the stock for $1.50 or $2 at most, and it's going to move 4 to 5 generally, and sometimes we're having these outside moves. So basically, there's your faux show, bro. So what you're looking at right there is every freaking day. So if you think this market's staying down, every time it breaks new lows, it comes right back and then breaks VWAP. Good luck staying short. That's our trade. So every time it breaks a new low, then comes back, breaks VWAP, we're buying. And with those zero-date options, if you get this type of move, especially at the end of the day, you're talking about 20-cent options that just rip to $1. These are 500% moves. You just got to sit and wait, just like I was saying. You sit and wait for the setup, and the shorts are getting their heads caved in. And speaking of that, I got thrown off TikTok the other day because I was doing this whole pantomime.
How do you get thrown off TikTok?
I did it. So I'm doing a battle scene. I'm pretending that I'm charging into battle. I pick up my sword. No, not that sword, you dirty bastards. I pick up my sword and I'm pantomiming, just going into battle, and I get shut off. And I get a flag. It says criminally violent behavior.
With your sword.
So I actually had to write a letter to my Chinese overlords that I'm an actor. I'm just pantomiming. It was a scene I was doing, and 2 hours later they reinstated me. So I'm back on TikTok. But that was pretty freaking hilarious. I'm violent. Dude,
you have to you got to be some psycho to actually get kicked off of TikTok. That is hard to do.
Criminally violent.
You found the way to do it.
Yes.
You found the way to do it. Mr. Kenny Glick, hit the bid. Put on a trade with Kenny. Seriously, put on the trade with Kenny. You could trade the common. You could trade the 0 DTE. I mean, use the vehicle of choice or do both, right?
Yeah, and listen, I see these TikTok ads. Speaking of TikTok, there's this one thing about, are you 50 and you missed the best 20-year bull market ever? Join our blah, 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 whatever. Right now, you will be making up for 20 years of lost time in this market. This is the greatest trading market I've ever seen. The opportunities are abound. And this illusion that you have to hit a $2 stock that goes to 18 to get a 900% gain is completely bullshit, because with these zero-date options, you're talking 200-300% gainers every day. And then every Friday is option expiration. That's why we gather on Thursday nights. If you guys are interested, tonight we're gathering. I'm going to introduce you to an analyst friend, one of the only analysts that I really do enjoy his commentary. Not my thing to crunch the numbers, but he's really good at it. And if you don't know, we gather on Thursday nights about 8 o'clock tonight. We play a Grateful Dead show from 6 to 8. And then we have a DJ coming on, spin them for us at around 10 p.m. So if you guys stay up night and you want to just talk stocks all day, and I'm hopefully along the queues right now.
Meta's ripping right now, 5.6% to the upside there.
Yeah, so good luck staying short, my friends. Cheers.
Later.
Meta, I just saw A headline, second day in a row. We get a random headline like this during the show. Meta's, I guess, they're rumored to be cutting their budget or their investment in the metaverse, which is like, no kidding, duh. So
the metaverse, they're cutting their investment in the metaverse. That's a bummer. I was rooting for the metaverse. Can we throw up?
Didn't even know it was still a thing.
Throw up slide 2. I just wanted to bring this up. I know we got Sean. We got Sean in the house.
We got Sean here, and we got a guest, spontaneous guest that Sean had mentioned to me a while back, who's here as well.
All right,
so,
rock and roll. Yeah. So this was the. This is what I thought was pretty interesting yesterday. You know, so you got the people get all their panties in a bunch about the Dow Jones Industrial Average because it's price weighted. So they get very upset about that. And so here's an equally weighted Dow Jones Industrial Average making all-time highs. So maybe this makes those people maybe less angry and look at it in a different manner. Equally weighted, all-time highs. Walmart, JP Morgan, Johnson & Johnson, Chevron, Goldman Sachs, American Express, all these companies making all-time highs.
No, not all those companies making all-time highs. Right?
No, all those companies are making all-time highs. What do you mean?
All of them.
Yes. Johnson & Johnson, JP Morgan, Goldman Sachs, American Express, Walmart, Caterpillar, all hitting all-time highs.
I would assume, JC, with an index as small as the Dow, there's only, as you tell us all the time, there's only 30 stocks in there. I would assume it would be a more prudent exercise to not even look at the equally weighted, just go look at the charts one at a time, and then draw a picture from that.
I like all of the above. Count, look at the indexes, see if one is showing the same thing as the other, and in this case, the answer is yes. The indexes are making all-time highs, and a lot of the stocks are making all-time highs, and none of them are making new lows, right?
Because what this isn't going to show you is the ones that are underperforming.
Yeah, the ones underperforming are Salesforce, Procter and
right.
Gamble.
Right.
I mean, United Health has been making its move now, but that was the worst of all of them. The chemicals company, Sherwin-Williams, like they're just kind of basing. They're just kind of sideways. Home Depot. Those are the ones that have been struggling the most, but you got things like Merck making new 52-week highs, 3M making new multi-year highs, right? So you've got a lot of the Dow components acting really well. Visa's just been in a sideways consolidation within an ongoing uptrend. American Express is already making all-time highs. Coca-Cola is making all-time highs. You got a lot. I mean, there's a lot more good than bad. Same thing in the transports, by the way. Look at C.H. Robinson making all-time highs. Expeditors making all-time highs. FedEx and Kirby look great. J.B. Hunt making new highs. We're long that one. Uber's in there. It's been struggling a little bit short-term, but that thing's a monster. Ryder's making all-time highs. Madson's making all-time highs. Right? So a lot. And then look at CSX, Norfolk Southern, Union Pacific. Look at those three. They're just sideways consolidations with an ongoing uptrend. So when you go index by index and you look at the major components. By the way, one more chart that I wanted to show, just like, again, to show the continuing of the broadening that we're seeing across the board. Where was this chart? Here we go. Throw up the new slide 2, and then we can move on. So I thought this was great, just kind of further evidence of, broadening in participation. More and more stocks are going up. We're looking at the NASDAQ, basically the NASDAQ Junior, right? So the NASDAQ 100 are the biggest 100 companies. The NASDAQ Junior is 101 through 200, right? So this is the next gen 100, 101 through 200 after the NASDAQ 100 QQQs, and it's making new all-time highs for 3 months in a row. The Russell 2000, by the way, closed at an all-time high 3 months in a row also.
Something I like to remind myself is if the worst thing you can say about a stock is it's gone sideways for a while, that's pretty freaking great.
Especially if it was in an uptrend prior.
That's a great worst thing to say, because going sideways is a hell of a lot better than going down.
Yeah. Sherwin-Williams is a good example of that. Like, it hasn't gone up, but it hasn't gone down either. It's kind of just
it hasn't gone down. That's pretty great. Yeah. So, all right, I want to bring Sean out And then I would like Sean. We'll talk about his options trades, but I want Sean to also tee up our guest as well. So, Sean, are you in the house? Sean's in the house. He's lurking backstage.
Hey,
Sean.
Shawnee, baby.
I'm all sore, man. We got a big dump of snow yesterday. Had to do my first shoveling of the season. Whoo, man.
Dude, so much shoveling you brought out your Canada hat.
I know. Well, I feel like I'm in Canada right now. Hey, we got like 9 inches of snow yesterday. Woo.
Whoa.
Yeah,
That
first
is-
snow of the season. Very exciting.
I wish we got snow still. We don't really get snow where I live anymore. It's kind of a bummer.
Yeah, we had like a wintry mix over the last couple of days.
We get like one snow a
Worst.
year. It's kind of sad.
Wintry mix is the worst.
Dude,
Like
it's the worst and most New York shit ever.
Yeah,
Oh yeah.
It sucks.
I'm going to
Yeah.
the city today. I'm going to be out tomorrow on the show. I'm going to the city with the fam. We're going to get Italian tonight. We're doing little Rockettes.
Speaking of going places, I just saw that our Miami thing's happening in January, not February. All right, I got to change everything. Just kidding. It's all right. It's okay.
There will be no snow in Miami.
Sean, what's on your mind?
Oh, JC, there's plenty of snow in Miami. There's plenty of snow in Miami.
Okay.
I wouldn't know about anything about those.
Miami
things.
invented snow.
Okay.
Come on. What are you talking about?
Sean, what's on your mind?
What's on my mind? Well, it seems like the bull market is back. I'm not telling you guys anything you don't know. We wrote out the transition pretty well. I think we've come to a completion, at least in the options portfolio, of all of the delta neutral trades that we put on a few weeks ago have all resolved profitably, which is nice. And then that's not me taking a victory lap. That's me just saying, hey, we put the right trades on at the right time in the right market. That's what they're for. They helped us ride out a lot of that volatility. And now we're back to the bullish bets that are working. And I mean, better late than never. Maybe this end of year face ripper rally is finally coming. It seems like it. I mean, when JC's putting up charts about the equal weighted Dow, everybody's hitting all-time highs. I mean, it's hard to argue with that.
You know, hard to argue. Don't fight Papa Dow, Shawnee. Let me ask you something, Sean. You know, one of my recent frustrations that have not come about in some time is the sheer number of opportunities that there are in the equities market, in common stocks, that just don't have liquid options market to participate in, right? Have you noticed? You know, there's a lot of rotation into small caps, as we know, 3 months in a row of new all-time highs for the Russell 2000. But, you know, when those opportunities, which you're seeing in the oil and gas, you know, some of these biotechnology stocks, right? Just these smaller companies, smaller tech stocks, they don't have a liquid options market. I'm just finding that more and more frequent lately than I have in a long time. So as somebody who only trades options, like, how do you think about that? Do you have any advice for me? Like, is there any therapy sessions for this, or just suck it up and deal with it?
Well, welcome to the world of options trading. We've been waiting for you, JC. We're glad you're here. What you'll find,
I just haven't been this frustrated in a long time because there haven't been this many small caps.
Well, what you'll find is that the 80-20 rule certainly applies to equity options. 80% of the volume is happening in 20% of the options that are listed, right? That's pretty common. That's always been the case. The good news is that there's more volume in those smaller caps than there's ever been. All right. You're still going to find a lot that don't have enough, and that's going to be frustrating. My only advice to you on that is when you come across options that you want to trade, but the bid-ask spread is too tight or too wide, or there's not enough volume there, or you don't feel like you could do anything. Those are definitely options that you want to stay away from doing any kind of multi-legged complicated spread. Not complicated, but you don't want to do a vertical spread. You don't want to do an iron condor. These are 2 and 4-legged spreads. Yeah, you want to stick with simple options plays, just simple buying a call or simple buying a put to express your directional bet. And you got to be patient, and you got to work your orders. If you're buying them, you want to work the order on the bid. I wouldn't sell these, by the way. Even if it's like the greatest setup in the world to sell naked puts, right? I wouldn't do that, because when you want to get out, that's when you're going to have trouble with that liquidity. So the better thing is just to be buyer only of those, work limit orders on the bid, maybe step up your price a little bit to prices you're comfortable paying. And you have to know going in full well that if you're wrong, it's a zero. I mean, that's it. But if you're right, that's great. And you have a couple of options to get out. If you're right and the stock rips, sometimes that brings volume into the option space, which is great, right? If a stock's having a big move, that's going to attract hot money, right? So that can bring in some volume that'll help you get out of those options. Or when you're an owner of a long option, you always have the ability to exercise that option. It's a pain in the butt, and some brokerages make it easier than others. But in cases, it's just a simple pick up the phone, call your broker, say, hey, I want to exercise these calls. And you can exercise them, get the stock assigned to you at the price of the strike, and then immediately sell the stock. And that's how you realize your gain. It's a pain in the butt, but at least you have an out.
You know what I did the other day is that I bought a stock, even though the common stock on another similar name, looked better on the common stock. I bought the option on a less, an opportunity that's not as good as the other stock because there was liquidity in the options market. And I figured, if this stock goes, the one that I think is going to go goes, and this one's going to go too, and that has a liquid options market, so I'm going to buy that. That's how I kind of got around that. Do you like that, or is that too cute?
No, that's good. And a lot of traders do that. And look, I know you're only a whale in the dick butt market, but for whales, they want to trade where the volatility is, right? And so that's going to be their preference all the time, right? Where is the liquidity? That's when those are the instruments they want to trade, or they want to trade at moments when there's liquidity, right? So like if you're a big hedge fund, you own, 50,000 shares of some big stock, you're waiting for one of those days when it's a huge spike and everyone's buying in. You're selling into that because that's when you're getting your liquidity that you need. So liquidity is key. That's the biggest thing. And in options market,
in the bond market too.
Yeah.
Like in the bond market, like all the liquidity is in the TLTs, right? So if you think that the 10-year is going to move, you could trade the 10-year bond ETFs if you want with no liquidity in there, or you could trade the 20 plus where all the liquidity is, and you're going to take advantage of that move that way. It's not as pure as what you are trying to do, but it's kind of like an offshoot that'll work if you're right.
Right. Yeah. Options give us options, JC.
Dude, this is real life, this is real life stuff, and I've just found it just frustrating lately. Like yesterday, I looked at 3 different stocks. I'm like, because sometimes I'll be like, oh, there's no liquidity. And then I'll be like, maybe there's something there. But, 3 times yesterday I looked and there was diddly squat. So I'm like,
yeah, there's nothing more frustrating than getting excited about trading to see the setup, see the stock breaking out, you want to get in, and then you pull up the options chain and the at the money call is bid 10 cents, offered $7. It's like, come on.
Right. Exactly.
Nothing you could do there.
All right. So what's on your mind equity wise?
Equity wise is I am long like you, a lot of biotechs, also a lot of metals, a lot of mining. Those are the stocks that are working. And, you were talking about J&J earlier. I'm in J&J. I'm in Pfizer. I'm in Merck. I mean, these things are all working. Let's go. Let's keep it going. I'm rightly or wrongly, I'm positioned for a face ripper into the end of the year. Whether or not that happens, I don't know, but that's what I'm positioned for.
What's the sector? I mean, I'm thinking discretionary. If we're going to get that ripper into the end of the year and spill over into January, discretionary has got to participate. And to Strazza's point, that bounce back in home construction, I think, further reiterates that. New all-time highs in Walmart might not be as pure consumer discretionary, but that's part of it. That's what I'm looking at. Maybe regionals?
Regionals, I mean, look, there's a lot of volatility.
Speaking of low liquidity in the options market.
I mean, there was a little spike in regionals a little while ago. I know this because I sold a strangle in the ETF, the KRE ETF. I don't know. I don't have any regional bank exposure, actually, now that I think about it. Other than CM, I don't know if that counts as a regional bank. That's Canadian. But I've been in that thing for a while.
I mean, I'm in the NU, which is a Brazilian, quote unquote, regional bank. But like in terms of pure play U.S. regional banks, I'm just not. I'm not there. But I got to tell you, they look great. I think that we break out of this multi-year base. I mean, this thing has been basing since the end of 24. Right? Since the end of 24. I mean, a big breakout here in the KRE. Woo!
I like it. I think that's bullish for a lot of things, right? I mean, if regional banks are breaking out, the economy's not crashing.
I mean, European banks are already breaking out. They're like the regional banks of the world, like just shitty, just bad garbage shit, you know?
Yep.
Right? So now the American version coming in hot, you know?
Yeah. Well, hey, we got a guest waiting in the wings. Let's bring him on.
Yeah,
Can we
bring
do
'em on.
that?
All right, guys. Adios.
Wait, before I do it, Sean, can you like kind of team up?
I could tee him up, sure.
Yeah.
So our guest is Nick Alexander coming up here. He's on Twitter. JFDI is his handle. I don't know Nick. I don't think you know Nick.
No, I don't know.
But Nick has caught my attention. He's a trader. I've been following his Twitter feed for a little while. He's a trader that I've been gaining respect for because it's very clear to me, and we'll have him talk to this, speak to this, but it's very clear to me that Nick gets it in the fact that having a trading strategy or a method to make money in the market, that's just table stakes. That's just table stakes. To be successful in the market, you got to get this together up here. And Nick seems to be a guy who gets that. So I'm curious to talk to him and get his perspective on things. So let's bring him on, Spencer.
Let's talk about it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is.
Hey,
Nick, how are you?
I'm doing great. That was quite the intro. Thanks.
Yeah. Hey, look, sorry about the snafu about getting you on here. You and I talked about a month ago, and we picked this day to have you on. And then I was excited to talk to you today, and I like pinged Spencer last night. I'm like, hey, did you confirm with Nick? Is he good? And
I was like, oh crap!
Shit,
I was like, crap! I forgot.
Thanks for rolling with this last minute pop on.
Totally.
You're not in Colorado, are you? I see a Denver Broncos sweatshirt there.
I wore this for you, actually. My grandma's in Arvada. Most of my family's kind of split between Arvada, like the Grand Junction, Fruita area. So,
okay.
Yeah, definitely spend a decent amount of time out there.
Right on. Well, where do we find you? Where do you spend your time? Where are you living?
I'm in Minneapolis, St. Paul.
Okay,
yeah. I'm in
it's cold where you are too.
Yeah. Let's see, we've probably got close to 4 inches of snow on the ground so far. All the ski hills they're pumping snow out like crazy. So they're all opening, but nothing probably like out there.
Well, I'm just outside of Boulder. We just got our first dump of the season. We got about 9 inches of snow yesterday.
Okay.
So I've been shoveling. I'm all sore. I've been shoveling like crazy.
Yeah. I feel like once kind of fall hits, I always kind of feel that soreness in my like in my neck from having to throw on like the jacket and the heavier clothes.
Yeah. So Nick, you're a new face on our show. Let's talk about let's give our audience a little bit of sense about what are the things you trade? What products do you trade? What's your style of trading?
Pure equities. I try to keep it very simple. I have my bread and butter trades are expensive stocks that have put in like a sideways, like I love horizontal bases. I kind of jokingly have this motto that expensive stays expensive. And so if you're focusing on names that are 100, 200, $300 plus, sure, they can top out and roll and head back to, no man's land. But I mean, I would identify myself as probably a weekly trend trader.
Okay.
Most of my decisions are made based on the weekly charts. I'll nitpick my entries on the daily. I got my start day trading on a prop desk down in Scottsdale way back when, like 07, 08, and spent kind of the earlier part of my career in life trying to transition from a day trader into like a swing and position trader. So it was definitely a process, and it was difficult to do, but I'm pretty happy with where I'm at now. So
well, I think that's a normal transition, right? I mean, I think a lot of people come into the market as day traders, especially if you're not working on Wall Street, right? You come in as a day trader and you have maybe a little bit of success, you taste some success, and then eventually you start noticing that, damn, I had a great entry of that thing. And what if I just held that for 3 or 4 more days? I could have made, 6x the money that I made on that trade. And so it becomes a natural progression to want to widen your time frame because you get bigger wins when you're right. B, it's less stressful. And C, I mean, Nick, I don't know how old you are. I mean, I know I look like I'm 25, but I'm definitely not 25. But when you get older, you know, you don't want to be chained to the desk and just banging keys all day long. You want to let things breathe and give it time, right?
Yeah, I'm 40. I got 3 kids. It's interesting. The more cash I have put to work, the less time I'm at my desk. When I have cash to put to work, I'm at my desk a lot more. Just kind of stocking setups. I probably spend the majority of my time scanning and setting alerts more than anything. So
right, and that's good. That's good.
It's
So right, so you're spending more time kind of on the meta of it, right? You're looking at the charts, you're looking for your right setups, you're setting your alerts, which I think is great. I do the same thing. I mean, my chart platform has alerts all over the place, right? And I let the alerts tell me when it's time to do something. Otherwise, I sit on my hands, right?
I mean, it's letting the market tell you when to get in. I definitely lean into trail stops, so it's like, for the most part, I'm letting the market tell me when to get in, when to get out. I do resonate with a lot of the growth, O'Neill, Weinstein style investors and traders. So that definitely plays a big role. But the way that I use social media, like I use it as kind of an R&D department. I don't really care who says what. A lot of times, like, again, social media I use as kind of a scanning tool in itself. I know the setups that I'm looking for. I know the pivots I'm looking for. And so honestly, I'll just take names, I'll throw them in my watch list. And then, you know, if you're curating your list enough, the relative strength names will kind of float to the top. And if you're toggling back and forth between, you know, percentage gainers, dollar gainers, day in, day out, like the names that you should be engaging in should be standing out, at least in just the way that I'm kind of approaching and the way that I'm looking at it.
I love that you called using Twitter as your R&D department. That's really great.
Yeah.
Like it, and it doesn't matter who's saying it. It's just if ideas surface up, then you analyze them on your own.
Yeah, I definitely fell into the trap. I know when I early teens, it was like, I got wrapped up in the like, hey, look at me winning this. Like, I won like 5, you know, there was this kind of fad where it was like, instead of sharing screenshotting P&Ls, it was like you would do like a +5 or -1. And I don't know, I had to kind of like, dude, this doesn't, this isn't good.
Well, this hits on what I was saying kind of during the intro, Nick. The thing that I sense from you, and again, this is the first time you and I have ever spoken. The sense that I get from you is that you realize that having a strategy and having a system or having a method is important, but that's just table stakes to be a successful trader.
Oh yeah.
What's more important is having your head right, knowing that, you know, being humble, being open to possibility, and doing the work away from the screens on yourself to put you in the best possible condition to perform at your best, right?
100% psychological. 100%.
100%.
I've really developed this belief that you're going to act out your core beliefs within the market. And I kind of actually tweeted it earlier this morning, where it's like, your thumb screws are going to expose themselves typically when the stress test is on. And for me, that's largely when markets go sideways and go into chop mode, because it's so easy to get chopped up in. It's when you're in alignment with a trend, whether, especially the dominant trend, whether you're looking at the monthly, the weekly, it's kind of easy to stay in alignment with it. But once the market goes sideways, it's so much more difficult. And I guess, you know, for some others, for others that, you know, want to fight the trend, maybe that's a whole nother thing. But you're going to act. I spoke with, I can't remember her name now. There's a trading performance coach on Twitter.
Denise Shull?
Nope.
Anne Marie?
She preaches Nope, not Anne-Marie. She preaches the hero's journey, and she has taken kind of another approach where if you can identify your core needs as an individual, let's say you have a core need, like the need for adventure or, whatever it may be. If you're not getting those needs met outside of the market, you're going to seek those out in the market. So personally, like I have a core need for adventure. Like I love being outside. I'm a skier, I'm a mountain biker. I like hiking and all that kind of stuff. If those needs aren't getting met, I will start gunslinging.
Yeah.
Like I will start taking like way too many piker size positions just because I want to sling the guns. And it's like, once you start to kind of figure yourself out, I believe that if you're trading long enough and in this game long enough, you will meet yourself. It is the hero's journey. Like either you'll meet yourself or you'll buckle and say, hey, like this is just too hard or this is just too difficult or
no, I love that. I love that. Trading shows you who you are. And it's
100%.
amazing. It's like on the one hand, it doesn't make any sense, but on the other hand, it's like, yeah, any need that you need that you are not getting met outside of the markets, you're going to find a way to satisfy that need on this digital screen. It's like, how the hell can you do that? But it happens.
Yeah.
I can't explain it, but it happens. And it usually leads to bad things in the market anyway.
You've seen probably plenty of people mention it, but when it comes to trading and, having your strategy, your time frame kind of in place, like ultimately the level of discipline that you have is like discipline is the ultimate form of like self-respect and self-love. And if you're not disciplined, essentially what you're doing is self-betraying. Like you're betraying yourself. And it's kind of a nasty spiral. So, the most successful guys out there are incredibly disciplined. And I would argue that they have like an immense amount of like self-respect. You can extrapolate that out and like see how that would probably impact, your interpersonal relationships, how you engage with other people. Like if you lack discipline, chances are you have pretty poor boundaries and poor self-respect outside of the market.
Yeah.
But and in a sense too, like you almost become your own best contrarian indicator as well, because if you're starting to really delve into yourself and journaling about the way that you're feeling and you're overlaying that on a chart and you're saying like, for instance, let's say the market is, we have the tariff sell-off, right?
Yeah.
And
I call it the tariff tantrum.
You start to feel this level of like despair towards market bottoms. You're like, like, is the market going to turn? Like, I'm not a great short side trader, especially on the swing side. Like it's so hard. The relief rallies are violent, and like I'm an optimist at heart. So you get a hard rally, counter trend rally, like I'm going to think that like, oh man, here we're turning. But I don't know where I was going with that other than just that, again, hero's journey, like self-discovery. None of us are really unique or special. I don't think. Like we're all feeling the same things at the same time. It's just a matter of how the individual is responding to that feeling. Some people may be more aware of those feelings than others. We do a lot of things to kind of numb and distract ourselves from them, whether it's like, scrolling endlessly or, whatever the coping thing may be. But, yeah.
No, look, I'm on this hero's journey myself, just like you. I've been trading for 27 years, and I really feel like it's only in the last 3-4 years where I've finally had some like deep realizations about who I am and what's important to me as it relates to the markets. And it's still an ongoing process. I'm not there if there's ever a there to get to, right? But I'm on the road, and it's a wild ride, and I just, like I said at the top, I've been following you on Twitter and I've been seeing stuff you write. I'm like, I'm connecting with what you're writing, man, because I'm there. And I just think it's strange. People who, especially if you're new to trading, and look, I'm running a traders meetup group here in Colorado, which you're welcome to attend anytime you're out here visiting. Just let me know. But we have a lot of new traders come in all the time, and one of the first questions that they hear from me, when they learn that I've been trading as long as I've been trading, they're like, "What do I need to do to make money? Like, should I be a day trader? Should I be trading stocks and not futures, or futures instead of stocks? Like what's the thing I should be doing?" And I tell them every time. I have this like standard response and say, look, you could learn a successful trading technique in a weekend seminar. All right. You can go to a weekend seminar and learn someone's technique. You can read Investor's Business Daily, William O'Neill, and learn about cup and handles. Yeah. That's great. That's great stuff, but that's not going to get you there. Yeah. Once you've got a strategy or an idea to make money, then you have to have the intestinal fortitude to do it and to make that trade when you just lost on 3 trades in a row. Right. That's not something that can really be taught. That's something you just have to do and do it and do it and do it. And eventually you get there. And damn it, for me, it's taken me 27 years to keep doing it to finally start figuring some stuff out.
I don't know if you remember Trader Florida.
I do. Yep.
He always used to preach, the pain has to exceed the pain of change to change. Yes. And change is difficult. Like, it's so hard, but eventually, like, the pain of change, or the pain of that, the pain that you're currently sitting in, eventually it will exceed that pain of change. Man, I love chopping it up with Perlman on Twitter. I think that guy's a genius. And to your point, the learning never ends. It's just another layer that we're going to be peeling back. When it comes to self-discovery, I kind of believe that the soul is naturally curious. So it's always going to be like peeling another layer, peeling another layer, peeling another layer. I don't know. It's part of the fun of the human experience, like we came here to kind of fuck around and find out.
That's right. That's right. Nick, I love that you're bringing up old names from the OGs in the Twitter world. I see Tommy Lackey in the chat. Tommy's an old OG. He remembers Trader Florida. That's great.
Yeah.
Well, Nick, look, this has been great having you on, and you and I could probably go real deep on a much longer session. So we should probably schedule something down the road where we could actually have some time to stretch out and talk. This is really good stuff. Look, next time you come to Colorado, let's do a hike together, man. I would love to go deep.
Absolutely. Thanks for having me. I appreciate it.
Dude, like I said, sorry we had that scheduling snafu, but glad it worked out. This is awesome.
Yeah, absolutely. All good.
Spencer, are you lurking in the shadows? You want to take us out of here?
Oh, I'm always lurking, Sean. That's what I do. I'm a professional lurker. I lurk here, I lurk there. When you think I'm not looking, I'm lurking. All right, let's get out of here. Thank you, Sean. We'll be back tomorrow, Crypto Friday. We'll talk to Louis. Maybe we'll talk to Fonz. I don't know. We'll see what happens. Thank you for watching, everyone. If you want to get Sean's free options note, where he talks about sort of kind of the things that they just discussed, he talks a little bit of trading, a little bit of psychology. The link, it's actually the very first link in the description on YouTube. It says Sean's free options note. Goes out, what, Sean, 2 or 3 times a week, something like that?
Yeah, 2, 3, 4, depending if there's some juicy stuff to talk about, All
right, check it out there. Thank you for watching. Nick, for joining us so last minute. Thank you, Kate.
Yeah, Nick, that was great.
And we'll see you guys tomorrow. Go make some money, all right? Oh, no. Where's my outro, Sean? There
it is. Sing it.
I can't take no love.